we're going to bring on Sean Udall. He's a tech stock strategist. He does his own numbers, and he comes up with earnings projections and
I'm pretty
estimates.
sure he's the #1 analyst on Estimize.
Really?
Yeah.
Really?
I'm pretty sure he took
Good morning.
You overtook me on Estimize as the #1 analyst?
Sean?
Sean?
Yes.
You are live. You are live on Benzinga's pre-market prep. How you doing?
I'm good, man. I'm good. How are you guys?
Good. We usually don't bring you in. You're live there, so we caught you off guard a little bit here. So let's just get your general appraisal here of the earnings season as a whole, and still got some big ones coming up. What's your take on the tech stocks and some of their earnings so far?
You bet. So, well, I'm glad you started with my overall take. So, if we could go back to 2 or 3 or 4 weeks ago, what was the whole view? The whole view was that the strong U.S. dollar was going to end the world as we know it, and every company was going to miss, and S&P earnings were going to be the worst since like 2011. So, the reality of the situation is the strong U.S. dollar has not caused an end to the world as we know it, and a lot of companies are still able to put up pretty good numbers. The dollar is hurting. You're definitely seeing some companies are better at managing the FX than others. And, some of these revenue numbers, I mean, Facebook is a good example. Their revenues would have been about 5% higher net of FX, which means their EPS beat instead of at 2 cents would have been more like 7 to 8 cents probably net of FX. So, it's having an impact, but it's certainly not causing near the problems I think some people thought it was going to. As far as tech, my general observation is that, I'm sort of two houses with tech. I'm sort of like my tech, everything I like, everything I'm comfortable owning through earnings. And then anything else that I don't have a lot of confidence in, I'm like, I'm not so sure. But frankly, tech in general, I would say, has probably been better than I thought it was going to be. There's a lot of companies that have beat that I thought were just going to kind of meet or maybe even have a small miss. And the companies I thought were going to be strong have been really, really strong. So overall, I would say the tech earnings are a little better than I think even I thought they were going to be, and I wasn't bearish on them coming into the quarter.
What's going on with Facebook today here? Kind of all over the map. They hit it on pre-market trading. They brought it back. Now right on the session. What do they like or don't like about the Facebook earnings?
Well, I think they didn't produce, a whopper of a beat that they have been. The beats have been getting smaller. My thesis on Facebook is that I went from it being my second largest position to basically not having a position a couple quarters ago, just because I thought, hey, they've got to a point where they're going to have a much harder time producing the big beats. They actually still are growing. The durability of their growth has probably been a little better than I thought it was going to be. But I think you basically have a tug of war right now between the people that like the quarter net of FX, right? Like, again, they would have had a 2 to 3% revenue beat net of FX. Again, the EPS beat would have been big. Would have been, maybe as much as 9 cents net of FX. So that you got the analysts who like that and who are still bullish in the stock. And then I've seen some cracks in the armor. I've seen a couple guys come out kind of with more my thesis where the durability of growth is probably going to be questioned. Maybe some of the money they've spent on some M&A maybe got a little too exuberant, specifically the WhatsApp deal. So we'll see what happens. I mean, the bottom line, here's what I think the stock's going to do. I think the stock's going to break new all-time highs. I think we're going to see something in the low to mid-90s, and I think kind of each progressive point, 5 points above 90, is going to get tougher and tougher unless Facebook can show that one of their M&A deals is really going to make hay. Now, Instagram was a brilliant deal. I loved that deal from the very beginning. Oculus, though, $2-3 billion that we'll see if that produces any revenue. And WhatsApp, that's really what got me kind of neutral to bearish on the stock. Had Facebook never bought WhatsApp for $19 to $22 billion, I would still probably be a bull on the stock. I thought that was just a massive overpay, and I don't know if they'll ever get paid back on it. And at some point, that could come home to roost. Now, if they prove me wrong, they start making $500 million to $1 billion a year on WhatsApp, which, by the way, still they paid, I think, too much money for it. But if it doesn't turn out to be a blown deal or a busted deal, maybe it does okay. But it's hard. Again, it's sort of like Apple. It's tough to find a company of its size that has anywhere near the growth that they do. They basically don't exist. You got Apple, you got Facebook. Twitter's a darn large big cap or large mid cap company. I mean, for a company doing $3 billion, their growth is amazing. So that's the biggest bull case for Facebook, is there's basically no other company on the planet at their size with their growth rate. But I think we're going to have a tug of war between the bulls and the bears. I think the stock works pretty easily higher, and I'm going to be looking at call spreads probably here after we get off the phone.
Okay, and Twitter here, help me out here, Brianna. They bought Peroculus or Periscope or
Periscope. You got it.
I got it. It only took 2 tries. Twitter's got I believe they're not coming up for a little bit here. I know I've been talking to you for a while about Twitter. Barreled through 50s, kind of been stalling here. You're looking for now. I know you've been just yearning for that 55 level, 55.40. I think we've talked about. What are you looking for in Twitter?
Well, I'm going to hold Twitter through earnings. I think the Facebook quarter is a pretty good read-through for Twitter. I think that again, everywhere where Facebook is strong, Twitter has higher growth than Facebook. So that's good for Twitter. I really do, at some point, so long term, a year and a half, 2 years, 3 years, I think people will be talking about Twitter the way they talk about Facebook today. And I think Twitter will, and we've talked about this before, it'll be a $100 billion, $150 billion company, and it'll be a very, very, maybe one of the most powerful companies in the world, even though they're not going to be the largest company in the world. So I think it sets up well for Twitter. I think Twitter's actually strategically positioned better. The beautiful thing about Twitter is you don't have any impact on the Google search deal that's going to be seen in the numbers this quarter. In fact, it doesn't even start to show up until next quarter. That will be small. The quarter after that is probably where the Google search impact for Twitter is really going to start showing up. So you have this beautiful 6-month runway of positivity in front of them. They're producing plenty of growth on their own. I mean, I'm frankly surprised people haven't just, the hammers haven't hit people over the head enough times to tell them that Twitter is they got to basically own Twitter. So I don't know what it's going to take. I don't know what it's going to take. Is it going to take a break of 55.99, the all-time high, plus a good earnings print to get people, back? Like to me, it's just
a no-brainer.
So glaringly
it's a no-brainer.
Obvious. It's amazing. I have to talk about it. I mean, it's just like Apple at 400. It was amazing to me how stupid people were on Apple and how easy of a buy it was. And how easy it was to say, look, you're going to make 50 to 100% on this stock. Yet, it took a long time. People didn't believe it. Blah, blah. You know the whole story. So, anyway, but yeah, no. Twitter is my favorite. One of my favorite, mid to large cap growth companies has been for a while, and I've been more right than wrong on it. So it's still, I still look for a retake of the old all-time highs on the name fairly soon.
Do you follow Amazon at all? They're due to report earnings after the close.
Sure.
Give us your take.
Sure.
Go ahead.
Amazon's a tough one. I think that you almost have to separate Amazon into the financial results that they produce and how people interpret them and how people trade the stock. It's kind of a lot like Netflix. So, I mean, Amazon could have like one particular number that is really strong in the quarter, and people choose to focus on it and drive up the stock. I do think the single best thing that's happened to Amazon recently, though, is Alibaba coming public. And I think if you just start, Amazon was really beaten up and cheap around the time Alibaba became an IPO, a publicly traded company. And I think people start looking on, wait a sec, if Alibaba's worth 200+ billion, Amazon's only worth a low 100 billion. Does this make any sense? And really, I mean, what have we seen since then? Amazon stock is up by 25-30%. So my guess is I'd say 65% chance, 70% chance they have a good to great quarter or a good enough quarter to keep the stock up. It's up here. I'd have a hard time doing much on Amazon just because I just don't know how much upside room they have. However, full disclosure, I would have said the same thing on Netflix, $65 lower. So, we'll see. I would be very bullish, and I was bullish on the stock in the low 300s. So for me, it's just sort of I don't want to pay the price, but I would be surprised if the quarter's relatively good.
Yeah, I mean, we had Gene Munster on a couple weeks ago, and he talked about it, and that was one that that he definitely was looking into bullish camp on that one. He thought you might see some similar action that you had last quarter, so we'll keep an
Yeah,
eye on.
exactly. I mean, put it this way: I wouldn't be short Amazon, the print. There's no way I'd take a short position.
All right,
So
I got to sneak one more in here for you, and it's an old
sure,
tech.
sure.
It's probably not even on your radar. What you think of IBM?
Well, okay, IBM was a really good example. So I put some notes out about a quarter and a half ago. They did the deal with Twitter. They got some stuff working with Apple. It's the old Titanic. They're trying to turn it around. But I actually am more bullish than bearish on IBM. I really like the stock in like sort of the 151 to 160 area. Their quarter was better than they thought. They did get killed by FX. So I actually like IBM. I don't own any. I do look at them from time to time, and usually I'm sort of like, well, there's just other names I like better that matrix out better in my valuation and growth system, right? So, I tend not to buy low growth to no growth tech companies because I can find plenty with growth. That said, I kind of value IBM a lot closer to 200 than I do the current price. So, there's a ton of intellectual property value. I think it's a better business than people think. The FX headwinds will probably become a tailwind in another quarter or two. So I don't dislike IBM. I wouldn't be surprised if we see, put it this way, if you and I are talking about IBM by the time they report next time, I wouldn't be surprised if the stock is 10, 15, 20 points higher. Sort of a $175 to $190 stock again would not be tough to forecast.
Could you get it to 170 by next week so my calls can be in the money?
Maybe. I mean, I think IBM's is going to kind of move with the Dow, right? So here, what'll help IBM? If Apple smashes and Apple gets through 133, and Apple's in the Dow now, obviously. So if Apple starts propelling the Dow higher,
yep,
they'll lift the IBM. There you go. If you want IBM, in fact, probably a sneaky cheap option trade might be to buy IBM 170s because there's probably no premium in them. And if Apple crushes it and goes to 133 plus, the Dow's going to go up a ton, and IBM probably makes an easy move to 170.
There was plenty of premium in them when I bought them. There was definitely.
Oh, gotcha.
All right.
Well, I don't know. I haven't looked. I would assume right now that there might not be a whole lot of premium.
You're looking farther out.
I'm not sure.
You're looking farther out. So when I see what you're saying. Okay. All right. We've been on the line with Sean Udall. He's a tech stock strategist. Great opinions on the markets backed up by facts. We really appreciate it. Thanks a lot, Sean. We're going to get you on again soon, okay?
Thanks, guys. Have a good one. Appreciate it.